Hello students, welcome to Top Scholars. Today, let us learn about the computation of income tax. Let's start. What are the different sources of income? As income tax is levied on income, it is necessary to know about the different sources of income. The five main heads of income can be income from salary, income from house or property, income from a business or some profession, income from capital gain, and some other sources of income. The total annual income, the gross total income, is taken into account for calculating the tax payable, which means for calculating tax, the income from all these sources are taken together and then tax is calculated on the same based on the rules. Now, there are sections 80C, 80D, 80G, etc. of the Income Tax Act which helps us to have some deduction on the total annual income. That means the total income can be reduced for taxation by sections as 80C, 80D and 80G. That is, we can make certain investments and using these sections, the amount invested will not be considered for calculating income tax. That is, our taxable income will reduce. Right, students? The amount remaining after the deductions are made is called, yes, taxable income. Understood? What is income? What are the different sources? All the sources taken together gives us our total annual income. From this total annual income, we may invest in certain schemes and under section 80C, 80D, 80G, etc. of the Income Tax Act, we can avail certain deductions. Then our total income shown will get reduced, and then this reduced shown income will be called as taxable income because it is on this income that tax will be calculated. Income tax is levied only on the taxable income, not on the income which has been deducted under the above mentioned section.
To learn more about this topic, download Top Scholars app.